So this is over here. The question is, what did the DXY look like during the last 2 Bitcoin cycles? We're often looking at cycles, right? The question is, well, Bitcoin is traded in dollars. We know that the dollar could strengthen versus all other fiat currencies and even commodities, and that Bitcoin could rise with the strong dollar and be stronger than the dollar. But we also know that if the dollar is weaker, that's going to help Bitcoin, right? Because if the dollar is weaker and Bitcoin's strong at this point in the cycle, then all of a sudden you're looking at Bitcoin being even stronger than it would be, right? So in this first cycle, it's not really a question. This was brought to my attention, and I can't find exactly. It was through a private message. I can't find exactly the message. I have quite a few messages, direct messages on Twitter, and I can't even read them all. It's not possible. So one of them could be a response to my reply to him, thanking him for this insight and this work. And I wish to give the credit where the credit's due, always. But by the way, could you smash the like button here if you're just joining us here on this Monday, Martin Luther King Day? Because we got a smaller crowd in here for the holiday. So let's get this going over here this morning, because it's a session 20 minutes in that I'm enjoying. Over here during the first cycle of Bitcoin, right? What was going on with the Fed? The Fed had just started QE, the third round of QE. Over here you could see that the Fed in 2012, they started their third round of QE. Amazing. And Bitcoin, you could see over here, was flying during that situation. So when did the Fed start tightening? You'll remember what happened after that is that the Fed, they started tightening in 2017. 2017, is that correct? October of 2017 means they started pulling liquidity from the system. They started pulling liquidity from the system because since 2008, they had been just pumping money into the system. And they said, you know what? This is not sustainable. We need not to exit. It took them 10 years. It took them 9 years to begin their exit, right? And then they start pulling money away. And what happened? Well, they started raising rates, right? And they started raising rates. And then it was December of 2018 and they raised rates again. And I remember that day, Paul Tudor Jones was like, they just made a mistake. They will never, well, when we say never, I mean for an extended period of time, be able to raise rates again, and they're going to have to start lowering them now. That was December of 2018. 1 year later, that was actually, that probably would have been one of the greatest trades over there. Anyway, he was deadly correct. At the day he did that, I remember remarking to everyone about what was going on, what had happened, and the significance of it. That happened to be the bottom of Bitcoin during its cycle anyway. I digress. That's not important. What is important is that in this cycle over here in 2017, the Fed started tightening towards the top. Okay, you could see that the first cycle was still under much more favorable conditions than the second. However, and you also, when they started tightening and raising rates, that's what caused the problem in the repo market starting in September of 2019. It was in March of 2020 when the system basically reached a tipping point because of the Fed's continued repo action. From the Fed tightening from their QE and raising rates, the Fed knows they can never do that again unless they're trying to actually crash the economy. But the Fed cannot tighten. That's why right now, when the Fed starts talking about, is the Fed thinking of stopping QE purchases early, and they start this discussion of Fed tightening, and then the market reacts because we had a taper tantrum the last time the Fed tried to taper, if you remember what happened in the markets. So everyone gets a little worried, but then the Fed, Jerome Powell was like, no, we can't even begin to think having that conversation right now or for a while, and they'll never be able to have it because, as you could see, everything's in trouble, and all that means is that more money is going to be printed and that taxes are going to go up. That's the next phase. It's just continued money printing, taxes going up. We're not seeing any signs of any dollar liquidity or strength, right? What we are seeing, though, is a cycle that's really helpful for Bitcoin over here, and that's why you're seeing under these easy conditions, Bitcoin mirroring more of cycle 1 than of cycle 3. I want to share this with you. This is from Kimball Charting Solutions, and they posted a weekly view of the DXY, of the US dollar index, and they also showed this channel over here. Now, I looked at this channel over here and I said, you know what, this is something I want to take a deeper look into. I wanted to go ahead and put it up on my chart, and you could see I've included that line right over there. This is coming back on the weekly chart, looking at January in 2005, where we put in this area of support over here. And you can see over here it was again tested again in May of 2006. Once that broke, that became resistance and has held as resistance since, and been tested multiple times, as recently over here as in January of 2017. That's a clean line. We know that's correct. Now, you all know how I do my TA. My TA, I take this and I clone this line to get the other line, to get the lower line. Or if I was cloning the lower line to get the higher line, because the market is always full of symmetry. You all seen that happen over and over again. Interestingly enough, if I first go ahead, and I'm going to move this down over here in just a moment, but if I first go over here and focused on this trend line that the market was focused in on, you can see the touch over here. Again, over here, the third touch. Once that broke, it held as resistance. Over here, again, as support. Over here, as support, resistance. You could say that this line is important and the market has been paying attention to it. And you could see that once we broke that line over here, this channel over here to the downside, what happened? Breakdown, retest, perfectly right back into that line, and then a resumption off, conquering the markets all day long. That to me is signal over here, but we do have these two instances where price breached that trend line over here. Let's take a look lower and see what else we could see if we move down now to this line. See, I'm focused over here right now on that touch over here. This is in October 2011. And then over here in this area between March and April, again, that was holding us support. You could see that very clearly. Look over here, you could see that price then over here as early as August 2020. That also tested perfectly on that trend line support. We're trading below that now as well. That's a clean breakdown of both those instances. The reason I bring this up is because we have this line over here. It's a little bit, in my opinion, subjective. There's no symmetry to it. Watch what happens over here now as we go ahead and we bring this down to the lower point over here. Let's bring it down as low as possible to these touches over here in May of 2011 through August of 2011. When we spiked down below the trend line, never closing below it, we didn't exactly come in to touch that lower trend line support. Do you all see that the flow is coming back over here? This is our second day back since vacation. If you're all psyched about that, go ahead and smash that like button. I do appreciate the support of the channel and my work. Definitely appreciate it and love whenever that smash button, whenever that like button gets completely smashed. And then over here, the reason I'm showing this to you, because even if I respect the furthest price impulse to the downside, and then go ahead and use that clone trend line, you can see that we have broken down there still, and we have broken down over here. That is technically very bearish event taking place here on the DXY. There is one last line of hope. I'm going to call it over here the line of hope over here. Let me go ahead and just make that a little bit darker for you. Before I show you that, I want to focus in over here, and just so everyone realizes, everyone right now is positioned short the US dollar. And by the way, since it's not clear in the chart, this goes from January of 2017. We're looking at 4 years right now, 4 years of data. And you can see currently right now, we have non-commercial asset managers, leveraged funds, all positioned short the dollar. Now, some contrarians out there might like to say, well, if everyone is short the dollar, perhaps we're looking at putting in a bottom in the dollar. From my experience, like for example, if you were to go ahead and do that over here, well, you would have been on the wrong side of the market for well over a year, right? Same thing over here. When everyone went long the dollar, if you're like, well, I'm going to go short the dollar, you would have been off on the wrong side of the market for a couple of years. Now, this trade so far has been taking place for 1 year, where you see that the majority are short the dollar. They were correct as of March. As of March of 2020, that's when the dollar broke down technically. But what I'm trying to say is don't fight the crowd. Don't fight the crowd. You'll never want to follow the herd, so to speak. But we are momentum traders. We're not looking to catch bottoms or tops. We're looking for the sweet spot of the trade. And right now, it's clearly the momentum is favoring that dollar being sold. And we want to ride that as far as possible, as far as the market is going to show us. I made this line over here, the line of hope, darker for you so that you could see it's an important line. You could see over here all through 2008, 2009, again in 2010, it was a big deal, holding as resistance support before that. And then again, it was tested as support in 2018. It looks like the market is attracted to this level right now, and that's where we're headed. Right now, this trend line over here is showing the lowest impulse of price extended out, and we're below. We've broken down outside of that channel, no matter how you line it up. And it looks like we're being drawn towards over here 88.40. That's the line of hope. If that holds, the dollar could definitely bounce. Not only could the dollar bounce, the dollar could bounce and come in and test this area over here, right in this area. Let me just make that a little bit darker for myself and for you. By the way, this analysis I do, I have to say that it benefits me the most, and it keeps me sharp, and it keeps me on the right side of the market. It is a pleasure and a joy to be able to share that with you, as well as share in this community with you. We could bounce over here off of 88.40 if that support holds and come up as high back around here towards 91, 92. 92, that would be realistic. I would say that there is a decent probability that could happen.